This is gold from April 7th, 2025, and we are looking at the transition trade setup. Now, what we have so far is we have the ADR session where we had this really big move that came up. We kind of come down, bounced around. Notice when we came up, we actually rejected from this monthly level. This is a new monthly level that was formed last month, or this month actually. And so we tested that, rejected, came down. We have a long confirmation in ODR. We stayed above this midline, which is really good news. And so it looks like what we want to do is maybe come down, something like that, go back up. Maybe we'll come down further, down to the midline, go back up. We also have this VOB right here, and then this one as well, okay? And so that's why in this particular scenario, our bias is long for right now, okay? And when we look at the data, just bring up the data here for a second. The data shows us primarily upside X plus is how the RDR model is going to form. Now, if we breach this ODR IDR high, then we kind of look at maybe upside X as the dominant. If we actually breach the midline, now we're looking at something that looks more like a range expansion type of model. Okay, so that's kind of what we're looking for, is if in the event that we end up coming down outside of the ODR session and we breach this midline, now we're looking for a range expansion, and this comes off the table. Okay, but until that happens, we want to stick to our particular scenario, and our particular scenario here is long. And so all I'm doing now is I'm looking for a level. Okay, so I have my directionality. I'm looking for a level, and my level could be very simply, this VOB. It could be this midline. Anything deeper than this, and I'm getting a little, there's not much else that I have available to me from a levels perspective. Let's turn on some of our other levels. Let's see if there's anything else. I'll turn everything on just for fun. Just throw it all on. Let's just see what we got. Okay. So when we turn everything on, again, it's like this level right here seems to be the one with the most confluence. So somewhere around here. So if we come down here, we bounce, it's okay to take a long from there is what we're looking at. All right, let me turn these off just to make things a little more clear. And let's bring up our 2-minute chart too, kind of see where we're at from a 2-minute chart perspective. Okay, so it looks like we're kind of headed down. Let's just keep moving forward here in time. And again, I want to make sure that I have some sort of level rejection that happens. Okay, so now we're kind of in this zone where we've said we could trade, we could look for something. And so let's see if we end up getting a color change somewhere down here. And sure enough, we do. Okay, so now we have a color change, and we have two entries. We have a really kind of a conservative entry where we kind of are expecting a pullback all the way back to here, or we have a little bit more of an aggressive entry, recognizing that we still have this wick that price could actually come down and take out that wick, right? So we could either go to here and back up, or we can go all the way down to here and back up. That's kind of what we're looking at. So I think I placed my order here, kind of basically at my typical greedy entry, which was the open of this bear candle that was overtaken. And I was looking for 2R to get to break even. Okay, so that's kind of what I was looking at here. And I was looking at a much bigger trade, at least coming back up to here. This area is 8R all the way up to here. And so do we come back down? Yes, we do. We actually came down and tapped it. So you can see I got tapped in, which is really great. We hit 2R almost immediately after that. Really on the next candle. It wasn't too hard to get to the 2R. Also kind of had this near double top up here, which is never good to see. So kind of came up, and then eventually I got taken out of break even, and then it ended up failing. Okay, so that's the end pretty much of my transition trading, which was a break even trade. And then at this point, once we come down here, remember what happens is our context shifts. We're no longer just, we're no longer thinking upside X plus. We're now thinking rotational. And we're thinking that price is going to form where the IDR looks something like this. And so this I have to be much more careful and cautious about from a transition perspective as we're kind of moving into the open and the DR formation session. I don't like to do a lot of stuff here, unless we kind of came very clearly and in DR formation, we formed, this DR high, IDR high right here, and it looked like we were coming down. That looks pretty good, or we can form from bottom back up. But you don't really know. I don't usually know whether we're forming from bottom up or top down. But I did want to just show this, that our context changes as we go into the open. We're no longer just looking back to go back up. We are looking for, something that's a little bit different, for sure. And so you can see here we had this nice move down, and and then we actually came right back up. If you look at what happened, we came right back up, and we very nearly formed a full range expansion before failing back down. So that's the transition trade, April 7th, 2025. Just one trade, one opportunity is set up for us, and it was break even.